In a world where markets constantly change, diversification across assets becomes more meaningful. The Kotak multi-asset allocation funds follows this approach by dynamically allocating. Let's break down what's happening inside the fund right now, why the fund managers are making certain shifts, and how the multi-asset allocation approach is helping fund to stay balanced and opportunity ready. Coming to asset allocation of the fund, the portfolio is predominantly allocated to equity, supported by measured exposure to debt, silver, and gold to balance growth with stability. A small portion is held in cash for liquidity needs, while the arbitrage component helps capture short-term price mismatches without increasing overall risk. From portfolio, there are no new stock entries and no new exits this month. That means the fund manager is confident about the current portfolio construction. Now, let me tell you how portfolio is treating each asset classes. Starting with equity positioning, large cap stocks continue to dominate the list, and for a reason. As we know, in uncertain markets, large caps may offer stability, better earning visibility, and could benefit early from policy changes and consumption recovery. The fund manager is maintaining equity exposure, not aggressively adding or trimming. Because domestic businesses' demand is improving, earnings recovery is expected to pick up, India-focused sectors are showing more resilience compared to global-facing industries. Here is a list of top 5 sectors of the fund. These sectors reflect a balanced mix of stability, domestic demand recovery, and long-term structural growth, complementing the fund manager's view that India-oriented businesses will outperform global-sensitive ones. Coming to debt positioning, the debt portion is being managed with 5 to 7 year duration, which may act ideal in falling or stable interest rate environment and when inflation is easing. Government bond supply is high, but it's largely due to maturities, not because of the excess borrowing stress. This positioning helps funds stay aligned with the evolving interest rate environment while remaining well positioned to benefit if rates soften through 2026. Coming to precious metals, gold and silver, in January we all witnessed gold and silver reaching an all-time high, and then we saw silver and gold crashing. Here's how fund reacted. When silver prices jumped sharply, the fund manager booked profits, but they didn't exit it because silver may continue to benefit from its industrial demand, supply deficit, safe haven buying. Meanwhile, gold remains a core holding, which may offer portfolio stability during global uncertainty. Apart from this, portfolio consists smaller arbitrage portion, which behaves like a buffer to increase equity exposure and offers flexibility without increasing risk too much. Now, the most important part. Going forward, what the fund is aiming for. The focus going forward will be on staying diversified across asset classes, benefiting from domestic consumption recovery, leveraging easing inflation and stable rates for better debt opportunities, using gold and silver as volatility shields, and maintaining a stable equity core while watching global developments. In simple words, the fund is preparing not just for the market today, but for what market could become over the next few quarters. The Kotak Multi-Asset Allocation Fund continues to do what it's designed for, staying adaptive, diversified, and opportunity ready across changing market cycles. If you want a portfolio that shifts gear automatically across equity, debt, gold, and silver, this fund is built to offer that balance.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.